Hello everybody, welcome to Cryptonomy. Today we're going to continue with our mission to answer the question. Is Bitcoin going to follow a 4-year cycle, or are we going to have an extended cycle? That's what we're trying to understand and answer with probabilities, with chances, with statistics, and with previous data. So we go into this with a completely unbiased approach. Imagine you do not have money in there, or you're not thinking of investing, and you're just doing it for out of interest. That's how we can take out any bias and actually make money in the market, right? We can get to the correct answer to our question without our personal feelings and biases getting involved. So in the previous video, we did come with some numbers, right? But we did have a limitation because, well, Bitcoin only have 3 cycles, so we only have 3 data points. We took these data points, just a little refresher, we used the normal distribution based on some assumptions that we explained and reasons why we used the normal distribution. We got some numbers and we put it on a chart. Just I'm not going to explain the chart again or the spreadsheet, but we're just going to very fast refresh our mind here. So we assumed that the market cycle could end with a 70% chance between October 5th and for example January 2026. I would even take it to February 2026 because as you will see when we analyze the stock market, the 4-year cycle of the stock market can sometimes end on February of the post-election year, right? The 3rd presidential year. So yeah, but we decided that to fit the normal distribution, right, we took the 1 and 2 standard deviation and the mean of our data set, and we assumed that if this is 70%, this between this area and this area, we have a 45% chance that the market could decline here. Okay, so we took the percentages from the normal distribution and then we applied that with 45%, and we got that from this zone, right, this box right here, this zone to that zone, that's 21%. That zone to that zone is 15%, similar to that zone, of course. And this whole normal distribution area can fit to, for us, 42.8%. All right. That's a safe assumption, but if we extend it here, of course, the percentage is going to increase, but we're not going to do that. We're just assuming 70% here and 45% here, and those are the data points we got. So to support our argument, we do need more than 3 data points, right? Because like that, our assumptions are a bit shaky, right? But Bitcoin, we cannot extend the chart more than 2009. Like we cannot go to 2005 and see what Bitcoin did, because Bitcoin did not exist. But there is something else that did exist, which is the stock market, which thankfully did have a 4-year cycle. And for a very long time, 20, 30 years. And the stock market did have extended cycles and did have shortened cycles as well. But there's a big caveat. Even when the stock market had extended cycles, Bitcoin sniffed the weakness and did not extend with the stock market. Is Bitcoin different now because of the different type of investors? Not retail now, it's institutionalized? Possibly. Let's dig into that question too. So what we're going to start with is we're going to go to the stock market first of all, and we're going to see, did the stock market have a 4-year cycle? And if it did, how was it like? And what can we learn from it? I have actually went through the process of splitting the stock market into all of its 4-year cycles. All right, and the best time that I saw the 4-year cycle fit very well, like Bitcoin's now, was between the 1960s to the 1980s. That's a big 20-year. All right, the best area that fit was in the 1970s. So this is where we're going to start from. Actually, let's start from August 1959. All right. But one thing, right? I'll go over this at the end because I don't think it fits our market condition right now. Here, the stock market was doing lower highs for decades. it was having long extended bear markets, because we did come out, if I bring out all the recessions here, there was a lot of World War One and, you know, like post-World War One and World War Two and post-World War Two. But after World War Two adjustments, we start to have like more of a normal 4-year cycle type of thing, right? Sorry. So yeah, let's start from here where the 4-year cycle kindly fits, right? So it's kind of from 1956. So from what I'm analyzing is from this peak. You know, we're gonna, because what we're studying is, are we gonna have a bear market this year, right? So what our pinpoint is gonna be the bear markets, all right? So we did have a 1956 bear market right here, and 3 years later, so we finished early 1 year and 3 months, another bear market or another local top based on this macro trend. This would be a major top, but it's a local top on this chart, right? Let's zoom in a little bit more. Right, so 1956, we ended 1959. So that's 1 year and 3 months early. Not late, early. All right, early. Then we can measure that as a cycle. So from 1959 August to December 1961, we also had a peak, and it was early 2 years. So that cycle was, as you can see, from 1959 to 1961. August, December is around early 2 years. You know, like a few months off and on is fine for us. We're not gonna like stress about a few months. And if we assume that the cycle ends between, you know, like say September to December, then that's on time. That's when usually cycles end. And you can see, for example, late Q4, right? That was happening like August. That's fine. That's a little bit early. December, January. Sometimes we end in January. You know, November, December, September, November, August. Sometimes it happens, but you can see majority of the cycles is between September and December, and mostly as well November. But we sometimes end August, sometimes July, sometimes late. That was late, by the way. But February, oh, that was late a few months. That's why I didn't record it. Sometimes late in the third, you know, presidential year, not the post-election year, not the second one, the third one. So yeah, we got all these factors understood, so we can continue our analysis without the nitty-gritties, right? So that was early 2 years, and then the first late cycle was actually in the 1966, where we ended late 2 month only. All right, and that looks like a lot of our current cycles. That's what we still have right now. We have short bear markets, you know, it can go from half to 1 year. We do not have very sharp downturns. That was like around 30%, and we do have a 2 to 3 year bull market, right? Just like Bitcoin, that matches our Bitcoin cycle. From here, we were on schedule many times over, right? So not long bear markets, you know, 150 to 300 days, and also not extended downturns, right? That was like around 23%. And we have elongated 2 to 3 year uptrend. And again, downtrend. This one was a little bit longer, but between 1966 and 1968. That was 1966, 1968. That ended early, actually. All right, so that was early, 2 years as well. Right here. So we do have sometimes early cycles. They're more common than late. Previously, before the 1980s, 1990s, we did have a lot of early cycles. So from 1968 to 1972, that's 4-year cycle. We ended in December on time. Same structure of downtrends and same structure of uptrends. However, in 1972, we did have an elongated bear market for around 700 days. That's like almost 2 years, if not more. And we did have a small pump, I would say. We just made a lower high, not a higher high this time. If you just get the arrow. Yep, that was the lower high. And again, we did have a hard bear market. Oh yeah, we talk about that. 4 years. 1976 to 1980, that's also 4 years, but we returned back to normal. short bear markets and elongated bull markets. 1980 to 1983, here we ended 1 year early. And if you notice here, right now, in the crypto market, every cycle ends in the post-election year. So like it's an odd number, right? It's the year after the presidential year, 2025, 2018, or like 2019, and 2021, something like that. And those were all the post-election years. But in the 1970s period, for example, here 2013, odd, and 2017, literally pun intended, odd, and 2021, and right now 2025, right? So just a distinction we can also like take into account throughout our study. We should consider every variable, right? Here, the caveat is that it happened mostly in the election years. So those were election years, all right? So from the 1980s to 1983, that was early 1 year. That's when we started having early cycles as well. 1983 to 1987, 4 year. And here we started doing it on the post-election year. That was more of the trend starting to be. 1987 to 1990, early 1 year. 1994, on time. February, a little bit late, 2 months. But 1994 to March 2000, that was late 2 years. All right, we're gonna pause from studying the rest, which has different structure, market structure, and just digest all of that. All right, what does that tell us about Bitcoin before we continue moving forward? That basically tells us the 4-year cycle does exist. It did exist in the stock market for decades. I would say for around 30, 40 years. We did have more early cycles ending than late cycles ending. All right, and the buyer markets do correspond with that period, does correspond to how our bear markets are behaving. However, early Bitcoin cycle, we did see much higher highs than now. All right, that period didn't see the stock market behave in explosive ways. All right, so 12% from a previous high and dump, and then you did get here even a lower macro high, and that was the market structure. So there wasn't like boom and euphoria. That's how it does not relate to our time. Okay, but what we can do from this is that the 4-year cycle did not only exist in crypto, but also in the stock market. And if we do a normal distribution around it, maybe we can, correlate the data to learn some stuff about Bitcoin. Where it gets very informative is after the dot-com bottom in the stock market. How, even though here it ends late, despite that, we can learn a lot of things. It is much more meaningful. All right, so February 1994, March 2000, if you notice that if you end the previous cycle on the February, January, these dates, you end in the February, you're more inclined to end in the February, March, January of the next bear market. Here we did have a large 6-year bull market. We did have some scary moments, like for example that one, where you did go down 22%, but I did not include that as a bear market because it was very short. It was for sure like 2 months or something. Putting that in perspective, Bitcoin did have a 6-month decline of over 25%, right? So if you from here to here, let's say here for example, that's 220 days, and we still didn't count that as a different cycle, right? To 32%. So let's keep the cycles and the bear markets and the bull markets more familiar to what we already use, which is the crypto microcycle, because that's what we're trying to learn about. This cycle was very deadly, the dot-com bubble, right? So we have, 1 second. All right. So we did have a long bear market of 3 years and a huge downtrend, right? So that was killer. A 50% downtrend over 3 years. That's why we had an elongated bull market, right? Of also 1,660 over, for example, 360, like a 4 year, right? And I don't know if that can be broken down, because that's also like what Bitcoin did here, 180 days, and it was a very similar structure to what Bitcoin did, very similar structure. So yeah, we can have late cycles. That was late 3 years, that was late 2 years, but they usually come after a huge euphoria phase, like the AI, not AI, the dot-com bubble. Now, if you tell me, oh, maybe we're in an AI bubble, we'll talk about that. Maybe we're in an AI bubble, right? Maybe we have that, right? Maybe. We'll talk about that. But this we can exclude it. After a long bear market, you have a long bull market, but this is included. Maybe we have something like that. But also maybe we have something like that right now, because Bitcoin didn't do much higher high than the previous market cycle top, right? And it's just like a, it's a joke for comparing to Bitcoin, not the stock market, but the Bitcoin. So it's like a double. No, it's fine. It's fine, right? I think here is like 2.5x. Yeah, it's fine, right? It's good. Everyone wanted more, but it's good. It's money. All right. So here where it gets even more complicated, but so much more informative, right? Let's not include this. Okay. If we don't include this, and we go here, because why would you include that as a bear market for the stock market if it only lasted some like 150 days, which Bitcoin did before, and we just like went down 21%. That's just a Sunday for Bitcoin, right? And for the stock market, it might be a big deal, but I think that's more like looking like a shock. I mean, obviously, I don't want to hold here, and that's why I'm inclined to include it, because if we include it, then you would literally put four years exact timing, but you did earn much earlier, right? To the May, not in September. That's why I say it's off, because it ended in May. Usually we ended for a reason. Something moved it to end that early, and that's why it's like the COVID crash. But also, let's not put narratives and conclusions. Let's just analyze the chart as it is, right? If we do include it, it did end a little bit early, and the 4-year cycle is intact. And interestingly, even though the stock market didn't go down by much, Bitcoin basically was in this downtrend. If this was a market cycle, right? We were interestingly going down. So when the stock market sees weakness, Bitcoin sniffs it out and goes down. That's the hypothesis we're building here. Even if the stock market extends its 4-year cycle, Bitcoin will not, from the data we see here. Not including the factor that the market players are a little bit different, majorly different. Entities, banks, BlackRock, whatever. It's not retail now. So there's also a caveat we have to work with here. Let's analyze it without acknowledging that the market players are different, which is, commercial players, and let's just analyze it for what it is, and then we can introduce that variable and see what we can study from, okay? So if we include that, we're actually on time, and then that would be on time as well. All right? I wouldn't say this is late 4 years and 2 months. No. I would say the stock market saw some weakness in the correct time, but it wasn't elongated because market conditions were favorable to go higher, and thus we went higher at that point, and just a small correction. But Bitcoin did feel it, and okay, all right. Let's see if this theory fits with future data points, future SPX price. So of 2015, 2018, we are early 1 year. All right, but is that a bear market? That doesn't involve lower lows. All right, we did make higher highs, but it was turbulence time. It wasn't your favorite time to be in crypto. If you sold here and you invested here, you would have been good. All right. If you sold here and invested like 1 year later, to February 2018, February 2019, you would be in the same price. You would have used that money to do something else and gain interest on it or something, and you wouldn't have had to look at the stock market price every day, and you wouldn't have been stressing about these scary downtrends and probably selling high and buying low, selling, yeah, basically, oh, selling low and buying high. That's 20% decline, right? It wasn't elongated. That's why it's not a bear market, but for Bitcoin it was. All right, for Bitcoin it was. When the stock market shows weakness, crypto sniffs that and goes into a downtrend, even if the stock market is not. But the stock market is showing weakness, and it is on schedule of a downtrend, assuming the 4-year cycle for the stock market and the crypto market. Interestingly, even though that was early 1 year for the stock market, because Bitcoin did have an earlier backdrop, that corresponds to exactly a 4-year cycle for Bitcoin in the early 2018. All right? And it exactly went down on December of 2017, which is the September, November, post-election year, fourth quarter, post-election year. Bitcoin sniffed the weakness way before the stock market and went down. Not one time, 2 times, and a 3rd time too, with the stock market that time. All right. So here, I think that blow off top, I believe it wasn't because there was some weakness in the stock market, because the stock market went on to making 16% higher, and for a large elongated time. I think that happened because of huge euphoria for crypto cycle, and a lot of people made a lot of money, and so they began selling, and then when the weakness started to come out, crypto market even went lower. But we sniffed the weakness earlier, nevertheless, and we started going up before the stock market. All right, usually Bitcoin also sniffs weakness because it's a riskier asset sooner than the stock market, and it ends earlier than the stock market and on schedule. Okay, so we have an explanation for that. That's why I like to count the early 2018 downtrend, because it does teach me a lot about what Bitcoin did. And even though it's not classified as a bear market, I wouldn't want to be holding the stock market or Bitcoin anyway. So that's that. If we do not include the 2018, then we're late 2 years. But if we do, we're actually right on schedule. Right? 2018, 19, 20, 21. Kinda. Yeah, we're right on schedule. Because that ended late 2018, right? The crypto cycle was supposed to be, like November 2017, for example. Then that would be 4 years. That's like a difference, maybe early, like a few months, like 3 months. But we agreed that if it ends in the December timeframe, it's right on track. It's, sometimes when you're like driving a car, you go faster, you go slower, you go faster, you go slower, and you make sure you're in line with the traffic, right? But you might go faster, sometimes you might go slower, but you will adjust your speed to be on the correct speed. I think that's what the markets do at the same time. And sometimes go faster, sometimes they finish earlier, but eventually they do reach that point where they do end in the September, December, in the 4-year cycle as well. And even though the stock market on schedule will not make a bear market, but it will show some weakness, it will show some cracks, it will go down 20% and maybe make higher highs, but it will not be making major highs that you want to be high at that time, right? You'll not be long at that time. So same, December 2021, the crypto market sniffed it out first. We went down first, right on time, and they went down together and they went up together. Now, if we align the 4-year cycle and we, forecast the future data point, then that would be December 2025. And I believe, even if the stock market doesn't go down, Bitcoin will, because of the seasonality. Because if the stock market just shows some weakness, okay, if the stock market is making consecutive higher highs, then I'll be like, wow, invest in Bitcoin. All right, I'll go in again. But right now, as I've shown this before, I'm around 85% in USDT and only 13.4% in BTC, and I've even sold more BTC. Now I'm 10% BTC. I will only reinvest into Bitcoin if we start seeing an extension of the bull trend. All right? If this one start going high, if Bitcoin start making higher highs, I'll definitely be accumulating Bitcoin again. But if Bitcoin is just, doing this thing here, I'm definitely selling. All right, in fact, I did a good choice by selling my Bitcoins in this zone. All right, I've been distributing all my profits and my purchase amount as well in this zone, and it has been a good playbook. Actually, this zone, I haven't sold anything here. Have I caught the top? I have no idea. I have no idea. Am I happy with what I did? Absolutely. Am I going to invest again? Possibly. If the trend goes back to being my friend. Because right now, selling is the friend, seems like, based on all the data points. I don't want to keep this video too long, so I'm going to just show you one more thing, to just, complete the picture. So if we assume the bull market of the stock market happens somewhere here, all right, let's just say here, and if we take, because that was the banana zone in a way, if we take that bars pattern, and if we do that, right, if we go take it to the current stock market, we are at the 2 weeks and the candles look that small. Okay, that doesn't fit. I'm gonna have to look into that again. But if you take some form of that, you would actually see it match to the point of that. No, it was here. It was somewhere here. Yes. If you take that and take that and put it here, then we're near the top. That's your .com bubble. That's your .com bubble. It's funny that we're just right on the price where it should be. It's just showing some little move up, maybe just for a year or something, and then that's, to me, that's even scarier than a bear market right now, because later that means we're having a 3-year bear market. I don't like that. Maybe I like that. Maybe we can go short. But of course, that's a very big speculation, and we're gonna look into that. But if you match that with the SPX divided by the world money supply, you get a very similar measure. The point is to fit as many pieces to the puzzle, not to fit our bias, but to draw a complete picture of what is happening. And this is what we're having to do. This is what we're doing, and this is what we will continue to do. I will analyze that and more. We're going to take all this data and make a normal distribution and get some real percentages on board. hopefully in the next few videos. So I hope you enjoyed. If you enjoyed, please like, subscribe, and I'll see you next time.